Welcome back to the DerivNavigatorAcademy. In this video, we'll be looking at the trading strategies and tactics, okay? So in the last chapters, guys, we have covered the three important aspects of price action, okay? So we have covered the first aspect that we looked into is the market trends, okay? We knew how to identify the market trend using multiple time frame analysis. We knew how to differentiate between trending markets and range-bound markets. And now every one of you understands how each market moves. If you do not, I will put a playlist at the end of this video where you can go and watch all those videos from the start, okay? The second aspect of this level is you learn to draw support and resistance, okay? And how to draw trend lines. This skill, of course, will help you enter the market better next time or in the right time, okay? So the third aspect is the signals, all right? You have seen different candlestick patterns. You understand the psychology behind its formation. And this is very important. Make sure all of you understand this because I covered this in totality, all right? You have to understand the psychology behind the formation of different candlestick patterns, all right? Now, these three aspects, guys, which are the trend, the level, and the signal, are what we'll use in our trading approach to make money trading any financial market, okay? Now, when you open a chart, you will try to answer three important questions, okay? So anytime you open a chart, try to understand these three questions. What is the market doing? Is it trending, consolidating, or is it a choppy market? For those who don't remember, choppy market is a market that you cannot predict, okay? That is all over the place. So is it trending? Is it consolidating? Or is it a choppy market? What is happening? If it is trending, you know how to identify if it is an uptrend or a downtrend. If it is a ranging market, you will see that it is trading horizontally between two boundaries. And if it's a choppy market, you will close your chart and you will stay away, all right? Now, what are the most powerful levels in this market? Now, if a market is trending up, listen carefully, guys, or down, or it is ranging, you will try to identify the most important support and resistance levels, okay? I'll repeat. If a market is trending up or down, or it is ranging, you will try to find the most important support and resistance levels. Okay? Now, these levels are the best zones where you can buy and sell the market. What is the best signal to enter the market? The best signal, write this down or listen carefully. The best signal to enter the market means the right time to execute your trade. And this is what you're about to learn, okay? So guys, strap on your belts because you're about to go deep into this, okay? Now, the first trading strategy that we'll be looking into is the pin bar candlestick pattern strategy. I'll repeat, the pin bar candlestick pattern strategy. Now, the pin bar candlestick is one of the most famous Japanese candlesticks, okay? It is widely used by price action traders. Price action traders are traders who basically trade only using candlesticks without indicators, without any trend lines or anything, okay? So the pin bar candlestick is one of the most famous, all right? It is widely used by price action traders to determine reversal points in the market, all right? Now, in this section, you will learn in detail how to identify potential pin bar signals and the conditions needed for high probability setups. Now, a pin bar is a chart candlestick, right? It is characterized by a very long tail that shows rejection and indicates that the market will move in the opposite direction. I'll repeat, a pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection and indicates that the market will move in the opposite direction. The area between the open and close is called the real body, all right? Between the open and the close is called the real body. Typically, all pin bars have a small, the real body is the main part of a candlestick, okay? Now, typically, all pin bars have a small real body. Again, put that into consideration, and a long shadow. A bullish pin bar is known for its lower wicks, and the bearish one is characterized by long upper wicks. The color of the candlestick is not quite important. However, bullish candles with a white real body are more powerful than candles with a real black body. Okay? I'll repeat, bullish candles with a white real body are more powerful than candles with a real black body. On the other hand, bearish pin bars with black real bodies are more important than the ones with white real bodies. We'll see this in an example. As you can see now, this is an example of a bullish pin bar. As you can see, you have a very long tail and a small real body. And a bearish pin bar, you have a small real body with a very long tail. Okay, so if it is upper, so that you can remember the bullish pin bar, how it looks. The bullish pin bar, of course, is going up. So the real body is at the top and the long tail is at the bottom. But the bearish one is going down. So the real body is at the bottom and the long tail is at the top. So that will help you not confuse this, okay? For the bullish pin bar, always remember it is going up. So the real body is at the top with the long tail beneath. The bearish pin bar is going down. So again, to remember, the real body is at the bottom because it is going down with a long tail upwards. That will help you differentiate these two because it can get a bit confusing, okay? So how do you identify pin bar? How do you identify pin bar candlestick setups? To be honest, the quality price action setups don't exist in the market because you will see some that sometimes you can find a high probability. Okay. Setup. Now you feel very excited about it and take your time to trade with the confidence. But at the end, you'll be frustrated because the signal fails for a known reason. I repeat, to be honest, quality price action setups don't exist in the market. Okay? It is very hard to find a one quality price action setup. Okay? Because you will see that sometimes you can find a high probability setup. You feel very happy. You feel very excited about it. And you take your trade with confidence. But at the end, you'll be frustrated because the signal fails for no particular reasons or for no unknown reasons. Now, this happens a couple of times because the market doesn't move due to pin bar formations. What moves in the market is the law of supply and demand. I told you guys, supply and demand is basically what runs the market. Okay? Let me give an example. Now, if you identify a quality pin bar candle near a support key level in an uptrend market, this is a powerful buying signal to take. You shouldn't ignore it. But if the same amount of money that buyers put in the trade is less than the amount of money that sellers risk in the same trade, the market will not go in your predicted direction. Let me repeat this for those who have not heard. If you identify a pin bar candle near a support key level in an uptrend, this is a powerful buying signal to take. You shouldn't ignore it. But if the same amount of money that buyers put in the market is less than the amount of money that sellers risk in the same trade, the market will not go in your predicted direction. If the signal fails, it doesn't mean that your analysis is wrong or pin bar don't work. It is just because the market didn't validate your decision. Therefore, you accept your loss and you look for another opportunity. You may ask yourself, why should we look for quality pin bar setups if the market doesn't respect them? Why? Let us see. As you know, trading is a game of probabilities. As I told you guys, trading is all about probabilities and risk. Okay? There's no certainty whatsoever in any way. That is why I tell you people, I tell all the people who usually come to me telling me, give me a bot that has 100% profit, that I don't have to do anything. My work is to plug and play. I usually tell them, clearly to the face, there is no bot like that. Okay? Because trading in the first place is all about risk. So telling me to give you a bot that has no risk is impossible. Okay? Because the bot itself is trading a market that has no certainty. Okay? So yeah, always expect some, there is no certainty whatsoever. It is all about risk. But what we try to do is minimize the risk so much so that we can experience some profits. Okay? In trading, it is all about evading and reducing risk. But I'll repeat, the risk will always be there. Alright? So don't think you can go into trading with 100% certainty. That is not basically possible. Okay? Now, this is why you should evaluate your pin bar setups from multiple angles. And the fact that you're looking for quality setups means that you're trying to put the probability of success in your favor, which is the right mindset, okay? I repeat, trading is a game of probabilities. There is no certainty, as I've said. This is why you should evaluate your pin bar setups from multiple angles. And the fact that you're looking for quality setups means that you're trying to put the probability of success in your favor, which is the right mindset for successful traders. Now, to determine whether or not a pin bar is worth trading, this price action signal should respect the following criteria. Now, every one of you, please screen record this part or write it down, because this is something that will help you big time. It has helped me big time, and I hope it will help you big time. To determine whether or not a pin bar is worth trading, this price action signal should respect the following criteria. The first criteria that should be respected is the pin bar formed in bigger time frames such as the 4-hour or the daily time frame should be taken into consideration. Okay, the pin bar formed in bigger time frames such as the 4-hour or daily time frame should be taken into consideration, because if you look at smaller time frames, you can easily spot a lot of pin bar signals. These setups should be ignored. Okay, if you look at smaller time frames are not reliable. Always use the bigger time frames to decide, and then use the smaller time frame for confirmation and execution. Okay, now you can easily spot a lot of pin bar signals. Now these setups should be ignored because smaller time frames generate, I repeat, smaller time frames generate a lot of false signals. Let us see this. Now, as you can see here, you have a chart. Okay, here we have a bullish candlestick, a bullish pin bar candlestick right here. Okay, the pin bar in a daily time frame, as you can see, it is bullish. Now, the pin bar formed in line with the direction of the market is more powerful than the one which is formed against the trend. Okay, always rely on a pin bar that is formed in line with the direction of the market. If you can identify a clear trend, that means you know who is in control of the market. The formation of this candlestick pattern with the trend makes it so effective. As you can see, the pin bar was formed in line with the direction of the market. So if you entered a trade right here, you'll have been making good profits at this particular point. Okay, don't rely on a pin bar that is formed against the trend. I repeat, for any market that you trade, never go against the trend. Always flow with it. It's like a river. If you try to swim, if the river is moving downstream and you try to swim upstream, it will be very, very difficult for you to be successful at that. So always flow with it. If you flow with the market, your account will be flowing with nice cash. Okay. So guys, always flow with the market, never against it. All right. So let us look at another one. Let us see this chart below, guys. Okay. So there you have a chart. We have a pin bar candlestick right here. We have another one right here, another one right here, another one right here, and another one right here. And as you can see, this is an uptrend market. Now, as you can see in the chart above, bullish pin bars that were formed in line with the uptrend work. Okay, as you can see, all bullish pin bars that were formed in line with the market. As you can see, we have one here, we have one here, we have these two. They are formed in line with the market, and they are all working because the market continued moving in an uptrend. Okay, now, and they should be taken into consideration, but the bearish ones that were formed against the trend should be ignored. As you can see, all these bearish pin bars that were formed should be ignored. The ones that are marked with red, right? Always ignore them. If you see a pin bar bearish candlestick being formed in an uptrend, ignore it. If you see a bullish pin bar candlestick being formed in a downtrend, again, ignore it. Okay, the anatomy of a pin bar is important as well. Okay, you have to make sure that the candlestick is a pin bar by looking at the distance between the real body and the tail. Pin bars with longer tails are more powerful. I repeat, for you to determine if a pin bar candlestick is a bullish pin bar candlestick is effective, ensure the tail, all right, which is beneath the real body, is longer, all right, is longer than the real body itself, and it should be longer. The longer it is, the more powerful it is. As you can see, this bullish pin bar is more powerful. Why? Because it has a long, All right, it has a long tail, a longer tail than this. Okay, so this one is more powerful than this. The longer tail proves that it is stronger, and as you can see, it really jumped high after being formed. The market really went up. All right, that signifies the intensity of that candlestick. Okay, now pin bars with longer tails are more powerful. Again, keep that in mind. Now, what is the psychology behind this pin bar candle formation? Pin bars are formed when prices are rejected. This rejection doesn't indicate a reversal signal because this price action setup can form everywhere in your chart. The most important areas to watch when trading pin bars are major key levels, such as support and resistance, supply and demand zones, and moving averages. Okay? The most important areas to watch when trading pin bars are major key levels, such as support and resistance, supply and demand, and moving averages. Now, the formation of this candlestick chart pattern in these levels give a clear idea about what happens in the market. If rejection was near support level, for example, this is an obvious indication that bulls are more powerful and they are willing to push the market to go upward. Okay? If a rejection was formed near a support level, this is an obvious indication that bulls are more powerful and they are willing to push the market to go upward. Again, every one of you must be understanding what bulls are in this lesson because we have really spoken about it. But don't worry, I will put a playlist at the end of the video whereby you can just go and click it and watch all the videos in totality. Okay? Let us see another chart. Now, as you can see here, you have a support level, all right? And you have a pin bar. This is a bullish pin bar because as you can see, it has a long tail. Now, if the formation of this candlestick occurs near resistance level, it indicates that so now this is being formed at a support level. But what happens if it is formed near a resistance level? It indicates that the bears reject prices and prevent the bulls from breaking this level. So that is why it is called resistance. So this means that sellers are willing to push the market downward. Let us see an example of this. As you can see here, you have a resistance level. All right, when it reached that point, the bears rejected and they started pushing the prices downwards. If you understand the psychology behind this price action pattern formation, you'll be able to predict what is likely to happen in the future and you'll make good trades based on high probability pin bar signals. All right? And that is basically, so this is the first part of this pin bar. It is very broad, all right? But if you are able to understand the pin bar candlestick pattern very, very well, you will make nice profits. So guys, I want you to follow this, okay? So if you have not subscribed right now, go and subscribe because you don't want to miss out. Because if you skip one lesson, you will be off. So go ahead and subscribe. Share this video to someone who you know is interested in trading in Deriv so that they can get a better understanding of candle charts. And if you want to download the video, you are free to do so. Download it. You can watch it when you're offline, okay? Watch it as many times as you can. When you're walking, just put your earphones and walk as you listen, okay? Because that is why I'm explaining it, so that you can listen and give you a better understanding. So guys, please follow along. This will be a very interesting. I told you guys the understanding candle chart series is a very nice one because this is very paramount for you to become a successful trader. Understanding candlesticks is the first step to becoming a very, very successful trader. All right. So guys, continue following along and thank you for your support in following this channel. If you've not subscribed once again, please make sure to subscribe. Please make sure you like, guys. Please make sure you share so that it can reach more people. Okay. And guys, thank you so much for your support and let us meet in the next one. Good luck.